You've probably heard about zero down home loans, but do you actually know the difference between a VA loan and a USDA loan? Spoiler alert, one could save you thousands, the other might make you swear off government loans forever. In this video, I talk to my podcast with an Indy lender. We break down the real pros, the weird rules, and the stuff your lender probably hasn't told you, including termite inspections, funding fees, and why some neighborhoods suddenly lose their USDA status overnight. Let's get into it. Now we're into the zero down payment portion of the show, starting with VA loans.
VA loans. If you're a seller and you don't want to accept a VA loan, a loan from somebody that served our country and they're un-American.
Oh,
yeah.
Wow. What if the house is dilapidated and there's zero chance?
Listed for cash.
All right. Well,
I mean, the difference between VA, FHA, and conventional, again, the appraisal, the value is calculated the same way. Same grid, same everything. The only difference is for VA, they're going to look for that peeling paint. Here's the thing. You may have a vet that just came back from fighting in a war and doesn't have the ability to go outside and paint the house.
Yeah.
I mean, that's what it comes down to. Maybe they just came back from deployment and they're buying a house with no money down, so they can't afford to fix, a failing roof, right? Maybe their shingles are all curled up.
There is a difference in a VA loan than the other two that we have talked about.
In the loan part or the appraisal part?
I'm not sure it falls into either of those categories. Probably the loan part, I suppose. It is the requirement of a wood insect inspection.
Got to have a termite inspection.
Correct.
Yep.
Yeah, it's more than just termites, but that's often what it's referred to as termite inspection.
It used to be all government loans had.
Yeah,
actually,
I've not seen that on FHA.
2000, and I'm going to say 2000 because I know we had to do it in 2000. FHA, VA, and USDA all had a home inspection.
Oh, okay.
So the inspection that you got done, we had to turn that into underwriting. You know today that you never want to give an underwriter an inspection report.
Nope.
And you'll never have an inspector ever walk through a house and not find an issue with it.
Yeah.
I mean, you would pay them to come back and go, nope, all good. You'd be like, oh, my money back.
For real?
It'd be like if you hired an attorney to read your letter and they went, oh, that's perfect.
So with the termite inspection,
mm-hmm.
my experience with that is that the seller is the one who ultimately has to pay for that, but I want to say that may have changed in recent years.
Yeah, 2022, I believe it changed. So buyer can pay for his own inspection.
There you go. But it is a requirement that a termite inspection is completed along with the inspection of the house.
And why would you buy a house not wanting to know if it potentially had termites?
It's a pretty good idea.
Yeah. I mean, so
wood.
When you have an inspection period, does a termite inspection come with a regular home inspection?
Often not. It's an extra cost. But so would this be.
And people don't pay an extra $100 to know if their house has termites.
Yeah, true. Oftentimes they don't.
Yeah, that's awesome.
Yeah. Okay, now, this is advertised as zero money down for the buyers.
It is zero money down.
I'm aware of that.
Yeah.
Do they still have to pay closing costs from like the title company?
Well, of course.
Okay, so
actually,
it's not really zero money down.
Well, no, it is zero money down. They have no down payment.
Okay.
On all loans, you have closing costs. This is a different category. Yeah.
I'm afraid that there are some people who believe zero money down means they're not going to have anything out of pocket when they get to closing.
Correct. That comes to me a lot. And you can do that. So VA, FHA, and conventional loans, you cannot finance your closing costs. So my buddy bought a house and he financed his closing costs. Right? Have you ever heard that?
Actually, no, I've never heard that.
Oh, well, you haven't done enough. You haven't done enough deals.
So it seems.
Somewhere around deal 700. You'll look at me and go, oh yeah, I've heard it a couple times.
Yeah.
So you probably have to be in the business. I'm going to say that's probably a 10-year,
all right,
10th year anniversary. You're going to look at me and go, oh yeah, I've had that a few times.
We'll check back in 5 years.
And it may show up more on the lending side.
Could be.
Because they ask that question a lot. Just a sidebar, favorite question ever since I've been in the mortgage business. Got a phone call. A gentleman said, hey, I got a question for you.
Did he talk like that?
He did. Is it better to buy a house before you file bankruptcy or right after?
That is a great question. Did you bust out laughing?
Yeah, I said you probably don't qualify. Second favorite one. Do you do boats? No, sir. What if it's a houseboat? Nope. Still no. Okay, as a sidebar.
Yeah. We were talking about closing costs.
Closing costs. So closing costs are what they are. So if you want to finance your closing costs on all loan types, here's what you do. I'm going to use $100,000 as the purchase price because my math is that of a 7-year-old.
Awesome.
I'm going to buy a $100,000 house. I'm going to put 3% down. I'm going to do conventional. And I want you to pay $3,000 of my closing costs. So, and that's the max. So I'm 3% down, $100,000, 3% is the max closing costs.
Okay.
Conventional loan, that's $3,000. You may look at me and say, well, I'm not going to sell you the house for $100,000 and pay $3,000, but I'll sell you the house for $103,000. And technically you financed your closing costs because you bought the house at a higher price and the seller paid the closing costs for you. Now, let's say you're talking to an FHA guy and they say, I want to buy your house for $100,000 and I want you to pay $6,000 in closing costs. They say, no, I'll sell it to you for $106,000. FHA will allow you to go up to 6% of closing costs. So now you financed your closing costs because you bought it at a higher price and the seller paid it for you. VA loans are the same, although it's 4% max for seller closing costs. And if you really structure the deal properly as a loan officer and you work great with your realtor, you can have it to where that vet buys that house and the only thing they're going to have out of pocket is their earnest money, which they can get back at closing if it's structured properly, and they're going to pay for their inspection.
Nice.
Yeah. Pest inspection, all that stuff's all included. Now, let's say you're buying a house FHA, VA, or USDA, and your house is on a well and your house is on a septic. And your septic is less than 100 feet from the wellhead.
Not okay.
Now you need a water test. Still could be okay. But you're going to have a water test. If you're buying a VA, USDA, or FHA loan and your house is on a well and you're on city water, no water test needed. Or if you can show that the septic is more than 100 feet from the well, no water test needed.
Okay.
So there you have it.
Important safety things.
Yeah.
Okay. The other zero down payment option is USDA.
Man, and they are a pain.
Okay. Now, I will admit to you, I have never done a USDA loan.
Because you live in the city, boy.
Because I tend to work with city people. Though I have had people buy homes out in the country, they just didn't use USDA. So what, okay, 0% down is the option.
Correct.
By the way, option is the thing. You can put money down.
Sure.
It makes your mortgage a little bit less because you've paid some off. So
right.
There is that option. Anyway, with USDA, how is it different?
What's USDA stand for?
United States Department of Agriculture.
Correct. So those homes are called a rural home. It's a rural home loan.
Okay.
Right. So rural homes are going to be homes that are located.
By the way, that is spelled RURAL, not RULE. It's rural. Go on.
Rural. You have to live in a rural area.
Correct. I got it.
Which means you're out in the country where the men are proud and the sheep are a little nervous. Right.
You know what? I'm a city boy. I don't know.
You don't. Hey, that's my dad.
Continue.
So when you're out looking at a home in a rural property area, I don't know if that slipped in there or not.
Holy moly.
So there's a couple rules on rural housing. There's a couple rules on rural housing that are a little different. One of them is there's an income cap.
Oh, okay.
For everyone that lives in the house, even if they're not on the loan.
Oh.
So Bobby's buying the house. Anita is not going to be on the loan, but she lives in the house and she's a nurse, a CNA at a nursing home, and Meemaw lives there and gets Social Security. I got to count the income of all three of them.
Wow.
Even though only one's on the loan. These two don't help them qualify to buy the house. They only help to qualify them not to buy the house.
Oh my gosh.
It's a fantastic program. Numbers, it's going to vary for every county in the United States based on what the area median income, but let's throw out $109,000 in most of the Indianapolis counties if you have 4 people or 3 people or less in the household.
Okay.
The income goes up for every kid you pop out.
All right.
Right? So that's one piece of it. It is the only loan where you can finance some of your closing costs.
Oh, interesting.
Let's say you buy a house for $100,000, you have $3,000 in closing costs, and the house appraises for $103,000.
Okay.
I can make your loan amount 103. We talked about PMI. We're going to slip back to VA really quick. VA. That's me going backwards. Did you like that?
Great.
VA does never have PMI, but VA never has PMI. We'll see how good your editing is if you clean that out and this sentence. VA does have what's called a funding fee. So if you're a first-time home buyer VA, first-time use VA, you're going to pay a 2.1% funding fee financed onto your loan amount. So if you're buying a $100,000 house, your loan amount is going to be 1021. Okay. If you're buying a second house and it's a $200,000 house, you're going to pay a 3.3% funding fee, and your loan amount is going to be $206,600.
Okay. Again, great math.
Thank you. If you have a disability through the VA that is 10% or greater, no funding fee. So if you're buying a house for the second time and you're a vet with 10% or more, best loan you can use to buy a house. Okay. Even if you're going to put money down, because your rate's going to be better.
Nice.
So slipping back to USDA, on a USDA loan, you're zero down, you don't have PMI, and you don't have MI.
Okay.
You have a funding fee.
Oh.
It actually has it's called a guarantee fee. And that guarantee fee is 1% of the loan amount. So if you're buying a $300,000 house, you're going to have a 1% fee of $3,000. Your loan amount is going to be a $303.
Okay.
And then you do have a monthly mortgage insurance premium that's not called mortgage insurance. USDA likes to make things difficult.
Life of the loan?
Yeah, for the life of the loan, it's 0.35%.
Oh boy, unacceptable.
Yeah. So USDA's way tighter on debt to income ratios, much more difficult to get qualified for than any of the other loans. But again, you have no skin in the game.
Yeah.
So it's going to be a little tighter to purchase one of those homes.
Something I find interesting is what qualifies as USDA, and you as a lender don't have a choice on that. And the reason I bring that up is because not far from you is a new home community that is a neighborhood where they're building cookie cutter homes.
Mm-hmm.
That qualifies for USDA funding in that neighborhood.
Probably not next year.
Okay.
So it's based on population.
Oh, okay.
So as that population grows, that map changes of where USDA is. And I think they change it minimum of once a year, but it may actually be twice a year. So what's crazy, though, is if you have somebody in there that's USDA today and they change it, if you have an accepted purchase agreement, you'll still be able to close it. Okay. But the next person may not be able to buy USDA. So it's an ever-changing, as the cities continue to grow, that USDA area is going to continue to disappear. I remember when I could do USDA loans just about in town of Shelbyville, and now it's outside Shelbyville.
Yeah, for sure.
Yeah.
I don't want to get into the weeds on what this is.
Did you bring a weed eater?
Assumable loans. FHA and VA are assumable. Is USDA?
Absolutely, yeah.
Okay, good enough. Okay, well, that's all very...
Well, we should probably do a whole podcast sometime on why you'll never be able to assume somebody's rate at 2.75.
Yeah, I honestly don't push those on people. But if you're a first-time buyer, VA and USDA loans might sound like the dream. Zero down, low rates, but they come with some fine print most people miss. Still trying to figure out which loan's right for you? Go check out my other video breaking down FHA versus conventional loans. It's the 1-2 punch every first-time buyer needs. And if you're buying in or around Indy and have questions, just reach out. No pressure, no nonsense, just straight answers to help you move forward. Hit subscribe for more first-time buyer tips that actually make sense, and you can reach my contact information in the show notes.